For all my market structure traders out there, those that understand the simple concept of choch, change of character, let's talk about this today in reference to trading futures. All right. And market structure, you should know by now, is not the holy grail, but it is the core ingredient, the major component that you must master and understand if you want to become a profitable and consistent trader. I don't care if you're looking to trade and make $200 a day or make $5,000 a day. It makes up the difference of you succeeding or not in this business. Okay, I'm just going to put it out there flat. And if you do not understand, and if you do not take the time to master market structure, how are you going to be able to read the markets correctly? You're not always going to get every trade correct. And I talk about risk management and tools or skills, not skills, but tools to use in a sense, not tools as far as hard objects. I'm meaning techniques, I should say, or methods to be able to get out of a trade quick enough. If you're into a trade before it runs your stop, or you may incur some drawdown. But let's talk about change of character today and how it is a key component to trading market structure. And basically how we identify it is an area where the market looks like it's going to turn around at, all right? But in a sense, it may be just an opportunity for us to look for a trade in the same direction, okay? Meaning if we are approaching an area of supply above, okay, and we're looking for confirmation to go short, we want to be able to see, or the market to clearly give us, show its hand as far as, an opportunity that sets up for us to take a continuation going short is what I'm trying to say. So change of character is where, say for example, the market, I'm going to show you an example that I took today, hits an area of supply. It rejects off of a higher base chart, and then we move down to a lower base chart. The lower base charts or lower time frame charts are going to help you get into more of a precise entry point. But we're paying close attention to that choch, that change of character, that break to the downside in a retracement to a key zone, meaning in this case here, an area of supply. And then we look for rejection. So let's talk about a trade that I took today. And it was, if we pay close attention, first and foremost, what I want to do is show you that the direction of the market to the upside, the sentiment was bullish. So you say, Mike, how did you know the market was bullish? Well, I mean, simple common sense, right? The market, all it's doing is making higher highs and higher lows to this upside. And each time it makes a new high, it's broke structure. All right. But what I was doing, I look out at and mostly mark my zones off of a higher base chart like my 60 range. But the market kept pushing higher, so I needed to look out to the left-hand side of my charts to find a zone, meaning a supply zone. I trade supply and demand. If you do not know much about supply and demand, but you have heard about it and you're interested in learning more about it, spend some time watching the videos here in this channel. I have loads and loads of educational component videos to where you can basically teach yourself, okay, through the means of educating yourself through the videos and become profitable and consistent. We have many members that are part of the Discord community. I'll say that have spent time watching the videos and without taking or paying for a trading course or a mentorship program. I provide the components. I provide through the means of these videos educational concepts, educational content that if you follow through and pay close attention, you'll understand the strategy and how I trade. And if you follow suit, then you can kind of mirror it yourself and trade. We have lots of individuals that have become successful in doing so. But without further ado, I don't want to ramble on about that. If we are bullish to the upside, you think about it in terms like this, okay? And before we do that, let me show you, right? Let me show you this. Let me bring this down. I just want to do a quick diagram that may help many individuals out. Let's say we're moving to the downside, okay? We have a nice pullback. The market breaks structure below. This area right here is going to be our primary target for supply, okay? All right. So we want to, look for the market to pull back to this area to look for rejection to go short. All right. So let me grab my arrow line right quick. So we look for it to tap into this area. So the market is going to do something like this most times, okay, and then tap into a zone. All right. This being a key area of supply. Once it taps into this area of supply, then we look for what? Rejection to go long. To go short normally, right? Okay. So, but here's the thing. If I like to, this is what I like to look for. I like to see some area of liquidity being taken. Liquidity, I talked about this before, is what fuels the market. So two things that I always look for in when I'm trading is, okay, did we run some area of liquidity as it pulled back to either a supply or demand zone, and as well, did we break, structure? Did we break previous structure? So we broke previous structure here to the downside, right? It pushes up or pulls back on its way back to the zone, pulls back, and then breaks above here, meaning breaking through the small area structure right here. But when it does that, it's actually taking out an area of liquidity as it retraces deeper back to the zone. So with an area of liquidity being run, and this is a breaker structure to the downside, basically this right here is just internal structure movement back to the upside. So you can have several like little swings back to the upside like this right here, and all this market is doing is just creating internal areas of structure. And I talked about this before, but as we're doing that and breaking higher, we're tracing back to a zone, the market is running through areas of liquidity, okay, to basically fuel itself to do what? To push back lower. So when it does that, then we get another breaker structure to the downside. So that's what I like to see. I like to see the breaker structure, and I like to see where market is taking out an area of liquidity. Now, let's say this right here. Let's say that this was a higher base chart, okay? And the market was, let's do away with this right here, okay? This was our higher base chart, and this was our zone where we're looking for the market to retrace back to, of course, right? Then let's say we move down to a lower time frame chart. Once it tapped into the zone, and let me do this. I'm going to do away with this. Okay? Once it taps into the higher base zone, and this could be a 60 range zone, and then we move down to like a 12 range chart. I trade range based charts. Now, what you can look to happen, okay, what you can look for to happen is to see once you move down to a lower base chart. Now let's say we're on a lower base chart. And let's say on a lower base chart, and I'm going to show you an example of this in real time on the candle charts. Once we got to that zone right here, when the market was making this movement to the downside, not the downside, but back to the upside right here, okay? And let's say it did this right here, and then it tapped into the zone. We're on a lower base chart. We've already tapped into the higher base chart, but we moved down to a lower base chart to see what price action looked like on its way back to that zone. And once the market retraces back to that zone on the higher base chart, we look for on a lower base chart, this is how we get into a better entry point, to see was there a change of character, okay, that was where the market broke lower and took out a small area of internal structure back to the downside. So when it breaks through, say, this area of structure right here, this low internal structure low right here, okay, on the lower base chart, once it breaks below an area like that, then we look for the market to pull back to a key area of supply on the lower base charts. That's what I've been talking about all this time. Marking the zone off of a higher base chart, supply zone off the higher base chart, and looking for a setup to where the market pulls back to a supply area on the lower base chart. But I like to see when the market broke structure below, meaning taking out a small area of internal structure, meaning an area of choch or change of character, okay, if you want to call it that, and then it retraced back on the lower base chart, back to the key area supply on the lower base chart right here. And once we get that, broke internal structure, okay, basically being that choch, okay, that change of character, break below, pull back to a key area that we just marked up on the lower base chart right here at supply. So we have supply here, okay. This was a higher time frame, a higher base chart supply, and then supply right here. All we do is look for a break and close of the candle in the opposite direction to go short, to aim for back down this low. And once it breaks that low, what do we have here? Another breaker structure. So let's go down to the charts right quick. I want to show you an example of what I did in looking at a higher base chart, because the market was kind of ramping to the upside, but it did touch base into a higher base chart, and I'm going to show you that. I moved up to a 120 range chart. This is what I like to look at, this chart here, just kind of look at from a broader spectrum outside of the 60 range chart to kind of tell me really give me a bias of what the market is really trying to do. So when I saw the market, continue making, in the Friday session, okay, highs, higher lows, higher highs, higher lows, and breaking to the upside, I immediately look to the left-hand side of my chart. So we'll go to the left-hand side over here to find where price is at. Let me do away with this right here. Right here. So when I saw the market tap into this small area of right here. This is supply right here. We had this area here. All this is a range, okay? And inside of this is internal structure. And it broke below this area here at 18,052 or 18,050. It left behind this key area of supply right here. Aggressive selling to the downside. Now this is on a 120 range chart. I'm not taking my trade off of the 120 range chart. But I do mark this zone right here, okay? And if we go back over to the chart, to the right-hand side, okay, we see where the market tapped into that area right here. All right, so that was at, what was that price level? Let's go back over to the left-hand side real quick. Sorry about that, but I'm trying to show you this and break this down to you so you understand. This was the supply zone, so we're talking about it like 18,085, okay? So here it is right here, 18,085 area. Now, as you can see, it's hard to kind of really determine, you know, to try to find some means of rejection. This is the important part of moving down to a lower base chart. So what I did was I moved down from a 120 range to a 24 range chart. Okay. And that put us back in this area right here. That was like at 9:30 this morning, I believe. Let's go back to that chart. Shortly after the market opened up, 9:40 or something like 9:45. Anyways, it taps into this area. At this point, I'm looking for a key area where the market on the lower base chart now broke through, or we had a change of character that happened, meaning the market is breaking internal structure back to the downside on a lower base chart. Because all this right here was just a movement or retracement back to the upside where the market tapped into this higher base zone, which indicates or notates off that red line right there to the left-hand side of the chart. And once it does that, not 12 range, 24 range, sorry about that. Once it does that, then I'm looking for, okay, where is a change of character going to actually happen at? A choch, right? So, but as the market was fueling itself or making moves back to the upside, it was breaking structure. So basically what it was doing was taking out areas of liquidity back to the upside, like right here, this equal highs, right here in this area here. So it was taking out areas of liquidity as it was breaking structure to the upside, approaching that key area of higher time frame or higher base supply. So when it taps into it, as you see here, we're on a lower base chart now, it does not break any area of internal structure back to the downside. We're looking for choch. Internal structure, choch, change of character. The market pushes higher, pulls back, and then breaks back to the upside again. And if it continues doing that, that's fine, as long as we're still within that zone on the higher base chart, which we were, because that zone on the higher base chart was like at 18,085, and it went up to like 18,130 or 131. Okay, so we're still within that 120 range supply zone. Now, when it did this right here, okay, pushed higher, low, okay. And then made a high here, final high right here. Then I noticed to where on the 24 range, it broke structure to the downside, took out this internal area of structure right here. So this was the first change of character or choch that the market made on its move to the downside. Once it does that, then we can mark our area of supply off of the lower base chart. It reached a higher base time frame or a higher base chart supply zone, and then we look for the market to break some mean of internal structure or have a change of character in the market. This is where it did it at. When it broke below 18,097, okay, you mark up an area. Yes, it could have been right here, this small area right here, all right, and the market came back and rejected and moved away. There was also an area resting back up here at 109. So this is the reason why when I saw that this rejection in that higher base zone, this is why I took that short that I showed you guys over on Discord. So if you're not interested, if you're not part of our Discord community, that's where I post my trade entries, and so do fellow members who are part of the Discord community. We like to post trade entries like this to be able to show community members trades that we're taking, and it provides an opportunity for people to ask questions when it comes to us taking trades. Not everybody trades supply and demand, but I trade supply and demand, and I post my entries, and I'll show you right now. Okay, now I was late on the trade because evidently I probably was not in front of the chart or was looking at something else. But either way, this is that area that I just showed you on the 24 range chart. The market was rejecting that area. Now you could have zeroed in down or scaled down to even a lower time frame chart. Excuse me, like the 12 range chart, and even kind of fine tuning, even more. But I actually took this trade off of looking at the 24 range chart, what was going on. So I traded off there. And, you know, a lot of times when the market taps into a higher base chart, like say, a higher base zone, like on the 120 range chart, I like to sometimes use the 120 range and I'll use a 24 range chart. Those two kind of pair together. And then the 60 range and the 12 range chart, those two kind of pair together. So I could have looked at it from a standpoint from 120 down to 24, down to a 12 if I wanted to, but I didn't move all the way down to a 12. I saw after this break of structure, internal structure, on the 24 range chart, I said, okay, we're probably going to try to push lower. So at that point, all it was a matter of just, let me move this out the way now, was a matter of just looking for a pullback to a key area of supply. And it did, okay? And once it pulled back to that key area of supply on the 24 range chart right here, it's just a break and close of the candle below to go short. And as you can see, it ran this low right here. It ran this low below here at 18,079. So in this case here, all right, we tapped into that red line mark, the 120 range supply zone, okay, to the left-hand side of the chart. Let's look at it again. I'll show it to you. Very small zone over here to the left-hand side, right here. All right, let's move back over. As you can see, it taps into it here on our higher base chart, 120 range chart. I moved down. This was where it tapped into it. So if you have a hard time seeing it, let me do this right quick. All right, you're probably saying, well, what is he doing? What is he looking at? Let's do this right quick. Actually, that's going to be a little tough to do because I have to carry it all the way through. But anyways, that red line notates that area there. So let's move back to the 24 range. That red line notates, again, that 120 range supply zone. And it continues pushing to the upside. But at some point, as long as we're still within that higher base zone and the market breaks internal structure, or we have a change of character, the same thing, back to the downside, then we just look for the market to pull back to a key area of what? Supply on the lower base chart, the 24 range. Now, what also made this trade even more of a high probability setup, look what it did as it retraced back to a key area of supply. It could have been here, and we had one resting right here. It took out liquidity right here. All right, it ran these highs right here. So we had this push to the downside. Price comes back, taps into, as it's pushing higher, to this zone right here, and it ran this area of liquidity. Okay, as well. Let's see here. Yeah, it ran liquidity back to the upside right here. Okay, it took out this high here, pushed, and then it broke to the upside, pulled back, and then it ran this area of liquidity right here just as well, right here above 106. Ran liquidity back to the upside. Had a push up, pull back, boom, broke up as it pushed back into the supply area right here. When you see things like that where it took out liquidity, that's the institution setting themselves up for a high probability opportunity to continue moving the market back to the downside. But at some point, you see this, they move lower, and at some point they continue pushing higher. But you try to capitalize on those supply and demand, zones. In this case here, supply zone. So this is just kind of like a entry model, a starting model to take a look at, to give you representation and an example of what we do when it comes to first of all, understanding market structure, okay? Identifying the structure of the market. Secondly, the way I trade, I have to see a break of structure, and I like to see where liquidity is being taken out. That fuels, those two things combined together are really the ingredients to setting myself up for a high probability trades, and with a gap back at the zone. I'll talk about the imbalance or the gap back at the zone, which is a very crucial part to my trading. So basically 3 things I like to see to kind of give me really good confirmation. All right, it's going to be a structural break, okay? An area where liquidity is being taken out back to, upside or downside as it retraces back to a zone, okay? And I love to see the imbalance or gap back at the zone. When I see those 3 things kind of combined, it really adds the fuel that I need to look for a opportunity to go, in this case here, to go short. Now I'm going to show you another example on a lower base chart right quick. And you could also take this trade, not say off of 60, but you can see a setup here that took place, and then move down to the 12 range. What I'm going to show you is this right here. That red line, again, notates the higher base, 120 range supply zone. Market makes a high, higher low. It's still moving to the upside here in this case here. It takes out structure right here to the upside at 18,116 or 117. So we're running liquidity back to the upside, okay, taking out liquidity. But then what it does is it breaks structure below here at 18,079. When it does that, we have supply resting in this area right here. Okay, there's supply right here. Now, what you can do then is just basically, again, Higher base chart, we can use a 60 range chart. We have a supply setup right here. What do we do then? We move down to a lower base chart to get or scale into, or not scale in, but to look for a more precise entry point. Use a 12 range chart, okay? Move down to a 12 range chart. We're looking for a choch internal break of structure to the downside. Then we mark that supply zone off the lower base chart, okay? And then when the market retraces back to that area on the lower base chart, we'll look for opportunity to go short. Now, if you went short, okay, on your lower base chart, you have to be mindful that we have a round number right below at 18,100. So the market did push a little lower that before bouncing and pushing to the upside. All right, so it retraced back to this area right here at 18,000, say 19. I mean, 18,119, and it came all the way back down slightly below 18,100. It's a round number there. I'll talk about half numbers of round numbers. Those are areas of support and resistance. Okay, they can act as areas of support and resistance. Now I want to move down to a 12 range chart and show you that there's opportunity to just use one chart, if you know what you're doing, especially if you know how to trade real quick and scalp off of a 12 range chart, say for example, but we're using the same concept. Okay, so we got the rejection there, all right, and then the market runs to the upside. It takes out above 18,121, let's say that, okay? So we got that high right there. Now, let's move down so at that point there, what do? We ran, broke structure to the upside again, okay? So pay attention here. So I'll move down to my lower base chart. I'm going to show you, just looking at this chart here, how I got into two little trades, and I just posted one up. I just posted one, which was a short in this area here, back to the downside right here, back over on our Discord. I'll show you that trade in a minute. Got into it a little later as well. I'm going to show you where the actual opportunity to get into the trade was actually at, but I got into it late. All right, so take a look here. So this was that area, 18,121, which I mentioned off the 60 range chart. But I scaled down to my lower time frame chart to kind of like just get it in for a quick scalp. When I saw this right here, the market broke above that area right here. Okay, so we got a break of structure to the upside. But if you take a look at a 12 range chart, you can see where the market pushed up, pulled back, broke structure to the upside. Okay, so we took out an area of liquidity right here, but then it broke lower right here and took out structure below here at 18,017. Okay, 18,017. Now, what you could have done was right here. I mean, it broke below this area right here, and then it pulls back. You can look for rejection to go short. There was also additional area, which that was a little area of supply right there. Okay, just strictly taking off the 12 range chart. And what it did was it pulled back right here, tapped into supply, broke structure below. If you can see that right there. So when it broke lower here, okay, this here was a break of structure. Okay, then it pulled back, broke lower, but look what happened. So it left behind this area of supply right here. Okay, we got a break of structure, small area, break of structure. Blow it up for you a little bit. Right here, break of structure to the downside. Pulls back, breaks lower. Then on the movement back to the upside, it runs a small area of liquidity right here above 18,117.5. Okay, taps into the supply zone strictly off the lower base chart, rejects it, get the break and close of the candle, go short. You aim for the low right here at 18,001. Right here, but pay attention to the left hand side of the chart. Look at all these imbalances right here back to the downside. So when I saw that there, I said, okay, the market is already broken into this area right here. There's plenty of imbalance back in this area right here. And this right here, this swing to the upside, okay, the swing to the upside right here was a swing that aided in the structural break to the upside right here above 18,121 or 122. So I said this imbalance is here. We're breaking structure back down, okay? Broke structure here to the downside, push down, pull back, broke structure again, pull back, took liquidity out right here as we tap into a supply zone. So we're moving to the downside, looking to the left-hand side of the chart to see where the market could actually pause at or stop at. It's back down here, this area, right here. Aim for this area to fill all this area of imbalance right here, all these gaps right here. And that's what it does, runs lower. So these are the type of things I'm talking about. Looking for supply and demand, using liquidity, looking for the change of character to actually happen. But when it comes to the change of character, I like to look for that when I'm marking a higher base zone, and then I scale down to a lower base zone. Like I'll talk about the 60 to 12 range. pulls back to a key area of supply or demand on a 60 range chart, and it could be any other higher base chart. But then we move down to a lower base chart to look for that internal structure break or that change of character, and then a new zone to be formed on the lower base chart, okay, meaning a supply zone like I showed you in the first example. That is what we look for in reference to market structure, okay, and change of character is a part of the concept that's included into market structure. All right, it helps us get into a more refined point or zone area of zone, okay, or point of reference or point of interest when we're trading supply and demand. So you need to look at things like that. The market taps into your higher base chart. Don't take the trade right off of a higher base or higher time frame chart. I mean, unless you got the capital, you love the swing trade or position trade, move down, scope, okay? Move down to get into a more sniper point of entry to where you're not incurring or taking on as much drawdown, okay? Because the market has it swings. You get into a 120 range supply or demand zone, the market taps into it. There's a lot of variation, a lot of potential for the market to come back against you before it moves in your direction, even on a 60 range. This is why I say move down. Okay, that's why I like to pair like the 60 and the 12 or the 120 and the 24 range. So, it's just show up to you as far as the preference of time charts or time base. What type of charts you want to use, what I'm trying to say. What time frames or what time, what base charts you want to use, chart styles, whatever the case is. You could use higher base tick charts and lower base tick charts, higher base volume charts, lower base volume charts, higher time frame time charts and lower base. For me, I like to use range. So I'm using a higher base range chart and a lower base range chart. But this is what I like to see. Again, the recipe, the things or the ingredients to the recipe and things I like to see. Again, I have to see a break of structure. I like to see where liquidity is being taken out. I like to see that gap back at the zone. These things really give me a sense of high probability setup within the market at a key area or zone off the higher base chart. So please focus in on that. But that's all I want to talk about today was that change of character and what you can look for to really kind of, zoom in on and getting to a better entry point and how to do so from a higher base to a lower base standpoint, okay? But that's all I have to share. I appreciate everyone that continues to watch the videos. Thank you to everyone who's subscribed to the channel. If you're not a current subscriber, please take the time. All you got to do is click on the sub button down below. Tap into all this valuable content and information when it comes to trading futures. I trade primarily the indices or indexes, which are the equities markets on the future markets, and most of us that actually are part of the community do. But it doesn't matter if you trade, any means of commodity or the financial markets, whatever you trade, the currencies. Come over and join us. The supply and demand is universal, so it doesn't matter. The key is really understanding market structure and how to trade it, correctly. But again, if you're not a current subscriber, please take the time to click on that sub button right now and make sure to turn on all your post notifications so you never miss one of the uploads here on the channel. Last but not least, if you found value in today's video covering the concept about change of character and how I use it in my own personal trading strategy, please drop a like on the video. Take care.